Good morning, it's Nicole, your go-to finance gal with Crypto Avery for market update on January 22. We've got some fresh economic data hitting the wires today, and it's painting a picture of a U.S. economy that's holding strong, maybe even stronger than many anticipated. Let's dive right in. First up, the Bureau of Economic Analysis released its updated estimate for third quarter GDP growth in 2025, coming in at an annualized rate of 4.4%. That's a step up from the initial 4.3% reading and above consensus expectations, signaling robust expansion fueled by solid consumer spending, business investment, and emerging tech-driven efficiencies. Pair that with this morning's labor market update from the Department of Labor. Initial jobless claims for the week ending January 17th came in at 200,000, a modest 1,000 increase from the prior week, but well below economists' forecasts around 209,000 to 212,000. This keeps layoffs minimal and underscores a resilient jobs picture heading into the new year. Now, what does this mean for the Federal Reserve? Traders continue to dial back expectations for any action at the FOMC meeting, concluding January 28th. Market pricing via the CME FedWatch tool shows roughly a 95% probability of no change in rates, with only about a 5% chance of a 25 basis point cut. The Fed isn't under pressure to ease with growth solid and the labor market steady, but watch inflation readings closely. If AI-powered productivity gains help keep prices in check without slowing the expansion, cuts could still materialize later in 2026. Over on Wall Street, markets are embracing the growth narrative in early trading, prioritizing earnings potential over immediate policy shifts. The S&P 500 index is sitting around 6,915, up about 0.59% from yesterday's close. That's putting equities in range of testing recent highs, as investors bet on sustained consumer strength and corporate profits to drive further upside even with the Fed on hold for now. Overall, this data reinforces an economy that's thriving rather than teetering, far from needing emergency support. But as always, stay tuned for any updates from global developments or the next inflation print.